Good morning, everybody. Just wanted to give you guys an update on the channel and the direction that we are deciding to pivot into, and give you guys a little bit of a preview of what's probably going to be coming up here in the next, I don't know, couple months or so. Right off the bat, I want to let you guys know that I am transitioning from trading stock daily for a little bit of money every day into real estate for a more long-term, hopefully retirement-ish plan for me, the wife, the kids, generational type deal. So, through that pivot, I've actually gone pretty much MIA. We decided to move the money we had built up in the market and buy our first house about a year ago. That's where we are now. This is the new office. This is our new space. So we got our new house. After that, we decided we wanted to really just start spending our time together more and hanging out more, bring the kids on adventures. So we've been doing some trips. We bought a camper. What else did we do? I bought a mountain bike. I've gotten super into mountain biking lately. Guys, I've lost almost 50 pounds in 5 months riding this mountain bike. I want to say 4 times a week, 1 hour each time, and it burns about 1,000 calories per ride. Right? It's an e-bike even. It's an e-bike. It's a, $6,000 e-bike, but it's a pretty sweet mountain bike, and I love it, and I still do it, and I think it's probably affected my life in so many other ways. Anyways, this isn't a commercial for the e-bike or getting fit, but I feel amazing. My food is better. My energy's better, man. My kids like it better. The wife likes it better. Everything is better. And I'm probably going to live longer. It's just do it, right? Exercise. Easy peasy. What else is going on? We did miss a giant rally in the market. That is true. I saw the huge rally. It kind of sucked. I want to say we had to pull our funds and buy the first property in May of 2023. So from May of 2023 up until about a week ago now, what are we, October 2024? I've been completely non-exposed to the market. What? Yes. So we had to use the funds to buy the property. And then we took the funds, and because I wasn't willing to risk losing the remainder, as the plan was to buy another property 12 months from then, I felt like I shouldn't expose that amount of money to the market, right? This is kind of the reason why I left the market. Size became a problem. It wasn't a big deal gaining, losing 200, 300 bucks a day, right? But when the number gets bigger and you're trying to build something for your future or retirement or have money that's going to last, not just, for the day trading just wasn't the answer for me. So we're going this direction here. And I actually really love it. Leverage is the answer why I love it. We'll get into it more, but if you take like $20,000 and you put it in the market at 10% a year for 10 years, or you take that $20,000, put it down payment on a property, 10 years goes by, say 4% appreciation, the amount of money is just so much more than the stock market. And then there's even tax benefits. So you could use this money here without being taxed, which is great. And the other one you cannot. So that's another hard part. And anyways, let's keep going. So really, I'm super into the real estate. Now, what did we do at the end of this year? We succeeded in our plan. We stacked up our cash and we ended up pulling the trigger on a fourplex here in Colorado Springs, which is our backyard. So I live in Colorado Springs. That's where our first house was bought. And then the fourplex is more like, in the center of the city. That's going to be an owner-occupied situation. So I am actually occupying one of the units there. And that's going to give me a real advantage on the opportunity to upgrade it, right? So the property is a value add opportunity. We can take this property here, upgrade it very minimally, at least to decent standard, and get that rent increased as the rent was already below market when I purchased it. There's kind of a reason it was below market, was because it was run down slightly in a couple of the units. Now, I'm doing a full ground up renovation of this unit. We're doing everything. We're doing ceiling texture. We're doing walls. We're doing the trim, carpet. We got to do vanities, bathtub. We got to do, I think, a toilet. Cabinets. That's a big one. I got to do cabinets in one of the units. That thermofoil, the water got in there. It's just, no good. Thermofoil sucks to redo and try to keep long term. Works for, cheap and fast, but not for quality. Anyways, So I'm really excited about that. That's pretty much my dream, my drive, what we're doing right now. Everything is focused on getting this fourplex stabilized. We're currently in a situation where I have a vacancy coming up in November to December, right? So November 15th, that's going to be vacant. My unit's vacant. So at that point there, all of a sudden, we're red on the unit. Okay. So we're going to be negative cash flow for a few months until we can get ourselves stabilized here and those units rented out. This is kind of one of the hurdles of entering the real estate market post COVID boom, right? I wasn't in the market prior to COVID. I didn't benefit from any of this appreciation that people that owned, say, 4 or 5 years ago did. I'm entering now. My rates on my primary here from a year ago is 5.25, but I bought it down slightly. I believe it was going to be, closer to 6. And then the fourplex we just closed now, that's also a VA loan, so the rate's a little lower than your conventional, but it's a 6.25 origination rate. So that's not great, and our cash flow is very low. Currently, the cash flow on the property is about $450 per month, as is before anything is increased or updated or anything. Before I touch it, $450 a month. And anyways, so we're gonna have a lot of videos on that. I want to document the actual rehab of the unit. I want to document the things I'm thinking, the things that, just the evolution of me as an investor, owner, operator in real estate, right? We actually did create our first business in that, real estate business, and that is a property management company. So we started a property management company. We had to get the EIN through the IRS. And then we opened a business bank account. So all that stuff's going on too. I think that stuff's amazing. If you guys want to learn more about how to start that stuff and become entrepreneurs and just try to start your own business, it doesn't have to be real estate. It could be anything. It could be like, you want to sell rocks like this you find online, right? You could do it. Even in person. It doesn't have to be online. But your reach is greater online. Anyways, so right now we have one unit on Zillow, which is cool. And I want to walk you guys through, like, every day as a new investor, what am I seeing out here? What am I seeing? How many inquiries am I getting? How many applications am I getting? What's the quality of the applicants, right? Are the rents going up or down? All that type of stuff on a daily basis, pretty much. Like today, I have an application I haven't even opened yet, but I'm interested to see what it is. It might be fun to open it with you guys, but I have to like block some stuff out, right? I can't have someone's name and all that stuff out there. So anyways, overall, if you guys are still diehard stock market people, that's awesome. I have stepped back into the market. We're about 30% exposed to the market of our total assets, right? And then the rest of our cash is actually in a 5% high yield interest savings account. And that's actually been there for quite a while, maybe like a year and a half now. And I'm starting to pull from that account and send it off into the market. But I don't want to go. It's really hard for me because we're at all-time highs, right? The market's crazy. To put it all in at the top would be nuts. I do see the gains are so much better than the 5% I've been getting for the year. A little bit of FOMO there, but we did acquire two real estate units. I mean, two structures, two APNs, right? We acquired two land parcels in the last 13 months, 14 months. And the plan is to acquire another one here in the next 12 months. So if you guys want to come along for the journey on that, that would be awesome. The kids are doing great. Seth is now 5 years old. Holly's 2.5. She'll be turning 3 just around Christmas time. And, wife is amazing. She's the reason I'm making it. Anyways, man, like, subscribe, share the video. If you guys want to come along on a journey of a brand new real estate investor post-COVID, follow along. I'll see you guys later, and I hope you enjoyed the update.